Hey everyone, welcome back to Corporate Decoder. Today VUZI just filed an 8K and a key executive compensation detail has my attention. Quick note, this is not financial advice, just my take on public filings for educational purposes. Vuzix has just announced new stock grants to its top executives, and the performance criteria attached are pretty interesting. So Vuzix Corporation, a company in the consumer electronics space, has filed a current report on Form 8K. This form is used to announce major events that shareholders should know about. The main event here is under item 5.02, which deals with changes in leadership and executive pay. Specifically, on the 29th of April 2026, Vuzix granted a significant number of restricted stock units, or RSS, to two of its top executives. Paul Travers, the Chief Executive Officer, received a hefty 477,178 RSUs. Grant Russell, the Chief Financial Officer, was granted 193,258 RSUs. These grants were made under the company's 2023 Equity Incentive Plan. Now, let's break down what these RSUs mean. Half of these stock units will be time-based. This means they will unlock over a set period. 1/3 of that portion vests on the 15th of December 2026, another third on the 15th of December 2027, and the final third on the 15th of December 2028. This is pretty standard for executive compensation, aligning the executive's compensation with their continued service to the company. The other half of the RSUs are performance-based. This is where it gets really interesting. These units will vest not just based on time, but on achieving certain business goals. What is particularly noteworthy is that the actual payout for this performance-based portion can increase. It might go up to 150% of the initial grant amount, or put another way, up to 75% of the total initial RSU grant. This structure is designed to heavily incentivize execs to hit specific targets by the end of 2028. Without knowing the exact performance metrics, it is hard to say what they are, but it is clear the company wants to drive significant results. Looking at the research context, Vuzix has had a bit of a rough ride recently with an 85% stock loss over 5 years. However, they've also secured significant development orders for military display technology recently. This compensation structure with its strong performance component could be a signal that the company is looking to aggressively drive growth in certain areas, perhaps leveraging these new military contracts or pushing their waveguide and OEM businesses to produce promptly, as one headline suggests. Especially to the CEO, show a commitment to retaining key leadership while pushing for challenging targets. The report itself is dated the 30th of April 2026, meaning the compensation decision was made just the day before, on the 29th of April. This quick turnaround suggests it was a priority for the company. In my view, this filing highlights Vuzix's strategy to tie executive rewards directly to performance. The potential for increased payouts on the performance-based RSS suggests management is targeting substantial growth or specific operational milestones. With the stock having underperformed historically, these grants could be a catalyst for renewed focus and execution. The risk I am watching is whether the performance targets are achievable and genuinely aligned with long-term shareholder value creation, or if they are simply aspirational. What I am actually looking for is transparency on those specific performance metrics. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. Subscribe and join our Discord for more.